Hello traders, happy Monday. It is 8 a.m. Chicago time, 9 a.m. Eastern on the 16th of April 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market's allocating to risk. There's more comfort with risk this morning. As most of you know, after the market closed on Friday, the U.S., U.K., and France staged an attack on Syria. And now, in hindsight, of course, I see why the selling occurred right from the open. And throughout the day on Friday, there was definitely a risk-off kind of trade. Today, risk is back on. The market's more confident. We also had earnings by the Bank of America showing some strength there. So overall, we're staging a gap up open within last week's range, pushing right up against the Globex high currently. So overall, the market is showing a lot of confidence in equities in risk right now. The leader is the NASDAQ, up 53 points or 0.8%. The laggard today is crude oil, down 63% or 63 cents or 1%. The Treasury bonds, U.S. dollar, the Eurobond, the 10-year note are all lower. Those are safety items, safety instruments. Gold is actually up $1.30 today. There was some tweeting from President Trump about how Russia and China are currency manipulators and it's unacceptable and so on. So I don't know if that's setting the stage for some monetary action or what, but just keeping an eye on the news on that. But that's where we are today. Let's take a look at what we expected on Friday, which we definitely did not get. Friday, I had, based on the context that we were in, I was very confident in the higher probability of a bounce higher to 2,700 would play out. We were gapping up on Friday. We opened around, we were trading at 26.78 and a quarter. During the trader bite, the expectation was it would close the gap zone or get close to it. Chances are it would leave a gap and then get a bounce. So I was looking for areas to get long, and that didn't work out. The market dipped into the prior day's range and didn't hold any of the day type levels, the day time frame levels on the long side. So once it pushed into the point of control and couldn't bounce back up, it was time to stop looking at the long side. That's the primary scenario there. The secondary scenario was for it to push higher immediately and fall back into the range for a push into 2670 before it bounces back up and balances out of range. In either case, I was looking for higher on the primary scenarios. This is what actually happened. Something very different. We opened at 2678.75. We went right down into the prior day's high right here. The green line is the prior day's high. We went right into that, bounced back up. Couldn't get the open back. Couldn't achieve the open. Got to 2678 versus 78.75 open, and then we just pushed right into value high here, which is the next potential bounce area. Very, very tiny bounce. And then it pushed right through the value low before it got its first real rotation up, 7.75 points. So from there on out, it just continued to give up territory. The bids continued to give up territory. The delta didn't lie. Delta was continuously pushing lower as the day went on. Some pretty good opportunities to the short side later in the day. A mid-test. A virgin mid-test after the range extension down. So the market extended the range down, got to mid. This would have created a pretty good confluence area. The prior day's point of control, mid VWAP, for a rotation back to the IB low. And then we extended even further down later in the session. We ended up putting the point of control right at the initial bounce low, right at the lower end range of the prior day. So overall, just a selling day. Again, unexpected, but this is trading. A lot of unexpected stuff happens. Overall, it held pretty good to the stock zones. Today's stock zones versus Friday's didn't change much. We're still trading the same areas. There's some small modifications in this region here, but overall, pretty good testing. 2668. Keeping an eye on 2668 this morning. But overall, the overnight inventory is long, 100%. We just gapped up. So the expectation with an attack on Syria is a gap down. That's what you would think. But it went so well, I guess. Not for the people living there. But I guess it went so well that we have decided to gap up from 2657 and a quarter to an open of 2673. So 16 points, exactly 16-point gap. We were responsive earlier in the session last night. A nice mid-test here for a continuation, and then we're in a correction phase here. The expectation is it'll likely continue higher and take out Friday's high. Now imagine what we ended up doing is the reason, not that it matters, the reason I believe the Syria strike news, which clearly somebody knew about or played the probabilities on, is on Friday's Globex session. Look at this thing; it's ripping higher. We have a trend type profile in the overnight session, pretty good volume. Pretty high range, almost 20 points, 18 points in range in the overnight session, with a point of control right at the high of the Globex session coming into Friday. And on Friday we open and we just take all of that back, drop right off, take all of it back, and actually put in a lower low to Thursday's pit session. Today we come in and we have basically come back right to where we closed Globex Friday morning, opened the pit Friday morning, and we are right in here and building a pretty good high volume node here. Pretty decent support underneath us. So overall, the overnight session is telling us that buyers are dominating. I'm going to look for it to rebalance a little bit once it opens, but not expecting too much on the downside. However, that's the attitude I came in with on Friday, and so I need to I have to make sure that I'm keeping an open mind. This is last week's weekly profile. Notice that we're one time framing down. We've got lower highs. The weekly, it keeps pushing lower. This last week's high is important in that it stops this. It breaks that. It breaks the one-time framing down and sets us up for a bounce back up into 2720, which is the high, the high volume. The next big acceptance price upwards is 2720. So that's what we're likely setting up for. Keep an eye out for last week's high, which is also Friday's high. Okay, coming into today, the expectation: open out of range, open in range, out of value. The expectation is that we're likely to rebalance on the open. I'm expecting it to move back down into the stock zone of 2668 area. That's the thin area of Friday's profile for a bounce, and then eventually start moving back up and consolidating at 2690 Now, if it pulls back, 2690 is the likely lid for today. 2700 is probably not going to be seen until tomorrow, but it's still well within recent ranges. That's the primary scenario. Okay, so little pullback to rebalance. We're in range, so the rebalance is expected. Responsive selling is expected, but if it doesn't happen, it doesn't happen. So I'm going to look for a shot in this stock zone and a shot ahead of this stock zone here. A shot meaning long. On the secondary, if we open in a wide opening swing and start pushing higher, the expectation is we would consolidate on the edge and then start to drift up. Again, I'm looking for up and away on this trade this week. Just looking higher this week. I'm expecting 2720 at some point this week with a relatively high probability. The third is we push near the prior day's open. If we get an impulse down, I'm going to see if it bounces at 2668. If it does not, if it falls through, then I'm looking for a short. And the target is going to be 2656. The 2656 area for a test of VPOC and close to close yesterday's close. So I'm looking for it to drift its way down. This is scenario number 3. All right. So that's what we're looking at for today. Just remember, there isn't a single trade out there that's worth more than 5% or 10% of your account on the outside. There isn't a trade that's worth hanging on to and needing to be right on to the point that you would give up a good chunk of your account. Just be smart. You're here to trade, not to invest. Don't be a trader that turns into an investor by holding on to a loser for a long, long time. And again, keep an eye on the news or keep an ear out for the news. It's driving a lot of the action. Good luck.